Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about some recent news of the Tesla stock price target being upgraded from $1,500 to a much higher number. So in just a few seconds, we'll go ahead and check that out. But just to give the run through for today, just talking about what Tesla stock is looking like so far. As you can see, the portfolio is just barely in the negative right now at minus 0.27%. And we've honestly had a really volatile day so far. I mean, at one point we were at plus 2.90%, and then all of a sudden it just spikes all the way down to this minus 0.39%, and then much farther down to minus 2.46, and then we're back up to the baseline again. So it's just untelling what the rest of the day is going to look like. But in terms of Tesla stock, it is actually the only stock that is performing well out of my portfolio. I mean, if you look at my watch list right here, you have the index fund style stocks like VOO and NASDAQ that are doing well, but pretty much everything else like the tech stocks and stuff like that are performing poorly right now. But one of the very few ones that are performing well today is Tesla stock. So with that being said, we're currently at around $1,500 per share. So today is going at least better than a lot of the other stocks out there. At least it's positive, and that's something to be grateful for. So with that being said, there was a recent price target that was announced for Tesla stock, which was an increase from what it was at previously. So if you do enjoy this content where I talk about Tesla stock and Tesla news, then please make sure to smash that like button. I really do appreciate it, and it also helps out with the YouTube algorithm. But with that being said, let's go ahead and jump over to the article about this recent news, which states that Tesla stock surges after Piper Sandler boosts price target above $2,300. So the price target is now at $2,322 for Piper Sandler, and that was actually increased from $939. So actually, it wasn't an increase from $1,500 to $2,322. It was like a $1,300 increase from $939 to $2,332. And in this article, it states that though Tesla shares have rocketed nearly 260% on the year, and the stock's valuation is 88 times higher than what it was after the 2010 initial public offering, Potter said that resoundingly, his conclusion is to stick with the stock. He stated that while deliveries are a key driver of our increased near-term estimates, software is the biggest driver of our increased DCF-based price target, he wrote on Monday. Tesla has noted the possibility for 30+% gross margins if or when more customers opt in for purchasing the full self-driving software. That could help Tesla record operating margins in the mid-20s by the end of Potter's 20-year forecast period, even if only half of the customers go for full self-driving software. And he stated that thanks to the high margin nature of the FSD package, we think that by the 2030s, Tesla could conceivably be selling vehicles at cost or even below cost while still achieving higher operating margins, he wrote. So with this being said, what I'm extrapolating from this article is that a lot of this added value that went into this price target increase is because of their speculation on the future profitability of the Tesla full self-driving software, which I think is a very smart thing to consider, because that's one thing that a lot of people don't factor in when they think about the value behind Tesla stock. And this is something that I've mentioned before in previous videos as well, but you have companies and stocks like Nvidia where the majority of their value is just based off of things like computer chips and computer hardware. And that's one thing that I really want to emphasize with Tesla is that there are so many aspects of vertical integration within their company. For example, they created a whole specific team just for creating and developing the in-house built Tesla computer chip for the full self-driving computer. So there are many aspects to this company and this stock as a whole that play a role in its value. And that's one thing that I want to emphasize with them talking about the software and the value of the software is that not only is this just an EV company, but it's focused on energy as well, such as like the Tesla Powerwall, the Tesla solar panels, and they really hit it on the head right here with this price target talking about the software and it being very valuable, because when you really think about this, for example, compare this to Amazon AWS, which is their cloud service. It's extremely profitable because with software, you save on a lot of costs costs. And especially with cloud networks as well, like with Amazon AWS, it's kind of in that software sector where once you have that initial cost of research and development over with, then it's pretty much pure profit after that. And that is really where software comes into play in terms of value and adding value to a company. And not only is this about the full self-driving software, but we can even be talking about software on the Tesla screen as well, where I think they now have a subscription service for that every month. And then they also have many other digital items and products that can be paid for on that screen. So this is really just talking about the full self-driving software, where in the future, if we have a decent amount of people ordering that software still, then it can be really profitable for Tesla because, like I said, there's not a lot of cost with software once you get that initial research and development over with. So do I think they have a pretty good bullish price target? Yes, I think $2,300 is much better and a lot more logical than many of these other Tesla bears out there, but I'm more in the boat with Cathie Woods on a higher price target because I see a lot more value in that FSD software than Piper Sandler may see. But I do have to give them props on adding a significant increase from the price target of $939 to $2,322. I have to give them props on that because it's not like they changed it from like $939 to like $1,100 or $1,050. They actually added a significant increase on that. So I definitely think they deserve props on that, and especially when you have many Tesla bears out there criticizing some of these analysts that are bullish on Tesla, that do see the long-term lens and perspective on this company. So with this being said and discussing this price target, I actually want to go over to Twitter, and for one thing, Elon Musk replied to this, wow, that's all he said. You know, take that as what you want to take it as. But this image on Twitter actually gives a much more detailed description on their reasoning for this price target. So we'll go ahead and jump into that and discuss that as well. So with that being said, as you can see right here, it discusses their price target. So the current price as they wrote this July 13th was at $14.97.06, and the target is $2,322. This is based on 20-year DCF, and this is by Alexander E. Potter, which is a senior research analyst, and then Winnie Dong, which is another research analyst at Piper Sandler. So this states runaway share gains and 90% margin software defending our new $2,300+ price target. So their conclusion with this states, Tesla is now the world's most valuable automaker with a market cap exceeding $280 billion. The stock has risen by plus 260% year to date, and the valuation is 88 times higher than it was after the IPO in 2010. S&P 500 inclusion seems likely depending on Q2 results. Is it time to redeploy capital after an amazing run? Resoundingly, we think the answer is no. In our view, Tesla is the most consequential company in the mobility ecosystem, and this is unlikely to change in the next decade. We are increasing our price target to $2,322 after adjusting our DCF model to reflect faster than expected share gains and, more importantly, a detailed analysis of Tesla's software opportunity. Further on, they state, it's hard to see how competitors can catch up. Tesla's own capacity is the biggest constraint to share gains. We are increasing our 2020 delivery estimates to reflect recent Q2 results. It's unclear whether management will provide an update, but we think Tesla's original 2020 delivery guidance of 500,000 plus units might still be in play, which is impressive given factory closures caused by COVID-19. Our updated delivery outlook calls for nearly 4 million deliveries in 2025, implying overall market share of around 7% in China and 9.5% in the United States. Admittedly, there is some uncertainty, such as the pace and magnitude of Tesla's capacity ramp, so the delivery estimates may prove unrealistic in some years, but the general upward trajectory seems certain, and as one particularly astute retail investor noted on the Q1 call, Tesla's longer-term guidance implies 4 million deliveries in 2025, so Tesla must have a capacity plan that supports this level of production, and more information will likely be disclosed at the upcoming Battery Day. The next paragraph goes more in depth on the software, which is really what was factored into this price increase when we talked about that article just a few minutes ago. This states, software, the reason why mid-20s operating margin is possible. While deliveries are a key driver of our increased near-term estimates, software is the biggest driver of our increased DCF-based price target, which is moving to $2,300 $1,322, up from $939. Tesla has noted the possibility of 30% plus gross margins if/when more customers opted in for purchasing the company's full self-driving software, and with our new updated model, we can now explicitly stress test this claim. It then mentions how Tesla could be earning mid-20s operating margin by the end of the 20-year forecast period, even with less than half of users opting in for full self-driving. We assume that the lump sum price of FSD software package will eventually rise to nearly $40K, up from $9,000 at present, with a 6-year subscription plan costing about 125% more than an upfront purchase. Thanks to the high margin nature of the FSD package, we think that by the 2030s, Tesla could conceivably be selling vehicles at a cost or even below cost while still achieving higher operating margins. It then mentions risk to achievement of PT and recommendation, stating production delays, failure to meet customer expectations, product defects and recalls, supply chain disruptions, and slow adoption of electric vehicles. And then company description, they describe it as Tesla designs, manufactures, and sells fully electric vehicles. And that's one thing I really want to note at the end of this whole thing, is that it really doesn't even emphasize the many other branches of Tesla as a company. This thing right here is really just focusing on Tesla in terms of its value as an automaker, rather than the many other sources of income in the future for them as well, in which solar and related energy production is supposed to be as big as the vehicles themselves in terms of revenue in the near future. So that's one thing I want to emphasize with this at the end as well, is that mostly this is just focused on Tesla as an automaker and not some of the products we could see in the future as well, such as HVAC systems developed by Tesla. That has been a rumor for a while now. And then, like I mentioned earlier, battery power and solar power are going to be huge as well, and definitely some big income sources for Tesla. And as we know, solar panels are like on the front page of Tesla on their website right now, so they're pushing for that much more. They save a lot of money by not spending money on advertising, and I do think they hit the nail on the head with their point about software right here. And I also thought it was interesting to see them say that the full self-driving could cost nearly $40K sometime in the near future, and if they don't choose that software, some individuals may simply subscribe to a subscription service where they may not have to pay an extra $40K up front for the full self-driving technology, but they will pay monthly for that. So that's definitely a good example of some potential ideas for the future in terms of revenue for Tesla as well, because I do think there are some people out there that may not want to pay that $40K or whatever price it is in the near future up front for that FSD software, but they'd still like to enjoy those features. So it may be good for people out there that just don't know if they want to spend $40K on the full self-driving software, but they can just test it out with a few months of a subscription service, and if they decide that they like it long term, then that can be added on later, or they can just use the FSD software temporarily with a subscription service. So you have options for the best of both worlds depending on what you're looking for. So with all of that being said, I think that's definitely an interesting price target, and like I mentioned earlier, I'm more in the boat with Cathie Woods because I think that Tesla deserves a little bit higher than $2,300 price target within the next 10 years. I honestly think that Tesla could hit $10,000 per share just within the next 10 years. I definitely think that's possible, but Elon Musk really has to push hard like he always pushes, and I don't doubt him whatsoever. He's one of these people that really puts in every single ounce of effort that he has. But anyways, I hope you all enjoyed this little news piece video. If you did, please make sure to smash that like button, and also feel free to sign up to Robinhood and Webull with my referral link. I'll leave that in the description and at the top of the comment section below. If you sign up with those links, then we'll both get some free stocks, which is pretty awesome. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week. Stay safe out there.